Crude oil for the entire week traded bullish but has erased all the gains in one single trading session and it is closed at the bottom here. Not a very good sign for the bulls for the coming week. Yes, though this is the fifth straight red candle here, and also the closer at the bottom suggests that it can continue here for the downside further. Can we expect now oil to move towards 68 levels? And can we expect oil to break below the critical support zone at 65, 67 as well? Because it is delivering lower highs, lower lows. Can we expect prices to move towards $60 levels in the near future? Or the lows are done and we are ready for a reversal, as in the near future we have seen it delivering higher lows, higher highs. What is going to be our strategy in order to profit trading crude oil in the coming week? We're going to see with the help of charts and indicators. This is a weekly review. I do share my twice a day updates for crude oil, first with the Asia session, next with the Europe session. Thus, subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Let's begin with the weekly charts here. Now, what has happened for the last few weeks? See, increasing bearishness. Look at the last two candles. See, both the candles, you can see we have seen prices retracing sharp all the way towards 73, 74 zone. Hitting the zone, we have seen a stronger reversal. Look at the last to last candle. It is closed almost at the bottom, hitting the lows, and this is the third time it is hitting the lows. Now, it is very, very important for us to observe how oil behaves. First, 69.870, whether it breaks below this, and then 69.3, 69.2. If these two levels are taken, we can say now the bears are taking over. What we can expect, because see, once it breaks below this, once it trades below 69.3, what we are looking at 68.4 as a very, very good target. And if that is taken, then you can say now 67 is in sight here. Right now, too early to conclude, but the signs are not very much encouraging for the bulls here. Moving averages definitely have now started to converge, and these diverge. These are already staying in the sell side. Also, the lower highs are something which is you should watch out for. But for the near term, I will say, see, it has formed a very strong support here at around 65, 67, 68 zone. This is going to be a very strong support zone, and a break below this is going to be something which is going to remain critical for oil for the next few weeks. Look at the stock IC. This has also come to an oversold zone. Look at the see MACD. After crossing over here, it is traded bullish. It is showing just convergence, not yet crossing over. Notice after forming the base here, we have seen a good rise, and since then it is just delivering swings. It has lot much of a scope available on the upside, but the closer last week was not a very supportive sign for further reversal or a stronger rise. But I will say we have to be extremely cautious. I will say till 65, 67 also do not treat oil as bearish here. RSI has dropped here. Coming to now, look at the daily charts here. See, oil is back in this bearish channel. The lows of this is now towards 69.2, 69.3, 68.4, and 68 levels. Yes, it is delivering lower highs here, though I have mentioned here that once it breaks beyond 74, 75, there is no looking back. But it has continued with the reversal process, failing to break beyond 73, 73.6. Now, see, this is the beauty of levels. I have mentioned very clearly it has to only break beyond 74, 75 in order to confirm complete reversal. It was not bullish, it is reversed from half the way, going close to 73.2 levels. We have seen a good reversal. Now, on the daily charts, notice the moving averages are starting to diverge. The price is reversed, and this is a single Mariboju candle. But notice what has happened last time when we have seen such candles. See, this was a stronger drop. Prices again taken the support from the 20 period moving average and then started to reverse. Now, notice this, after the rise, a single sharp candle, after the rise, a single sharp candle, and now possibly the coming few candles may again start to, as you can also see the $70 levels, first, second, third, and this is the fourth attempt by oil to break. And in fact, even if it breaks below still 69.2, 69.3, we should be cautious with the sells. The stock stick has dropped here, signs are bearish, but look at MACD after this greater it has just crossed over and not willing to sustain, again looking downwards, though I think it is going to be difficult for oil to sustain the another round of drop all the way towards bottom. But yes, these are markets, anything and everything is possible. RSI looking downwards, which is also not a very good sign for the bulls. Coming to 4 hour. Likewise on the 4-hour charts, now moving average is starting to diverge and it is closed at a very critical support zone here. Yes, till 70 we have very strong support. This is the fourth to fifth attempt by oil to break below. But remember, whenever it strikes multiple times, one point of time it comes that it, and thus coming week is going to be possibly a breakout week, but I will say too early to conclude. As long as now 69.2, 69.3 is respected in the coming week, we can say it is not yet reversing, it is not yet bearish. If you look at the stock ISIC, this is also come to an oversold zone. The MACD is crossed and it is now looking downwards. See, the body size is here consistently increasing. Look at the first move, second move, third move. Now third move is still it is having higher lows, higher highs. So still is still bullish only. Let's wait for further momentum here. RSI at bottom. Now the most important chart, the monthly. On the monthly charts, notice this drop, retracement, drop, retracement, drop, retracement. And yes, lower highs are consistently observed. Does this mean that we can expect lower lows? Where are the lows here? The lows on the monthly charts are now far below towards $60 levels. But I will say, look at this formation here. It has formed a very good support here in and around 65 to 67 zone. Very important for us to observe how it behaves at these levels. Next thing is, here you can see preceding two candles, though these were in green, the last candle after showing strong bullish momentum, we have seen it delivering very small greener body, suggests that the prices were not willing to stay. And the third observation, which I had shared several times, now the moving average have started to converge and the 20 period sitting at around 75. Very important for oil to trade the breakout levels 74 and 75. If at all it trades beyond these two levels, you can say this is the reversal we are waiting for, and this is the rise which is going to take it all the way towards 82 85 zone. Right now when you look at the movement, it is not very much supportive of this. It appears that it is willing to hit the lows here, but I will say, see, there are too much strong supports available till towards $65 levels, and hence the down move has to be taken with caution. If you look at the stochastic, this is rising after the greater dip. Look at the MACD is still bearish though, and if you look at the formation, this is the second wave here. Wait for a crossover. RSI, the RSI is comfortable. So now we have seen the charts and indicators. Time for me to give you the trading levels and strategy. And before we proceed, if you want to learn this art of trading, join my mentorship batch. And if you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email, ping me or Telegram for your queries. And if you're looking forward to a broker which offers you a swap-free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Now, first thing is where to buy. Again, 70.5, 70.6 is the level at which you can initiate a buying entry. But then, first and nearest resistance at 71.1, 0.2 levels, the first one, then 71.6, the second one. If this is taken, then I think we are ready for a round of rise 72, 72.4. Then beyond 72.4, we are looking forward to 72.85. And if this is also taken, stay bullish for 73.3, 74. And now once 74 is taken, direct landing is 75. Now see, the more distance it covers here, the more bullishness will increase. And now a breakout beyond 74 should be a very good indication that we are looking forward to a greater rise. Wait for it to trade above 75. 76.2, 76.4, and then beyond this we are looking at 82, 84 zone very very soon. But right now it is not showing any strength of such a breakout move. On the downside, now I'll recommend a selling entry at 70, 69.75 first, 69.3 second, very important support here, and then 68.64. So these are going to remain the key support. If at all oil trades below this, you can expect a greater corrections towards 67.8, 67.1, and then 66.5. Below this, you are looking forward to a greater down move all the way towards 65, chances for which appears to be less in a single week. But the kind of bearishness it has delivered on the last trading session is not a very good supportive sign for further bullishness. So take your trades accordingly, take your positions accordingly, like, share, subscribe, and comment. Join my mentorship batch, join my signals channel, reach out to me for your queries, join the free Telegram channel for live updates, and the channel memberships here on YouTube to support the effort. Thank you. Have a great profitable trading week ahead.